Hey guys, it is tax season yet again of the year 2024. So I wanted to throw at you a few simple tax planning strategies to utilize while you are working. Now, this is tax planning. This does not mean we're going to do crazy stuff to reduce your, to maximize your tax refund, even though some of it may be partially true or somewhat true. So keep in mind, this is tax planning strategies to utilize while you're working. The first thing that comes to mind, of course, in my head, and most of you have access to these, is going to be a 401k through work. This could also be a 403b or a TSP, etc. Now, you have to take advantage of these throughout the year, so the calendar year, because every 2 weeks you get paid, your contributions go into this account plus your employer match. So that's one thing to do for the year, and the dollar amount's 20, whatever it is now, 2000 and change, 23,000. There's a catch up if you're over age 50. So basically do the math on this, how many checks you receive for the year, divide that into the dollar amount allowable into here, and you'll get pretty close to it. You don't necessarily want to maximize this in the first 2 months of the year and then stop, because you may or may not get your match then on your employer plan. So you want to stagger that out over the entire year on your 401k contributions. Again, this is 403b, TSP, any kind of workplace plan. Now, by doing that, and typically I go the traditional route on here, although we are seeing more Roth options pop up. But I like to have my clients' assets split about half-half between pre-tax and Roth in the grand scheme of things, just so that we have tax diversity too. But again, this is just a real simple conversation on what you should do for tax planning while you're still working. Take advantage of that employer plan all day long. Again, aim to max it out. Those things are very, very powerful. You can put a significant amount of dollars into them as well too. Bonus points if you tap on a automatic increase, etc. too. That will force you to do more, and you won't even know it's gone. Right? You work, you get paid, your contributions go into your 401k, and then you get a check into your bank account, direct deposit of the net of that. You've already done your job. You put into your retirement there. Let's do that simply. Next thing would be a health savings account, or HSA, if you are eligible for one through your employer, or you can create one on the side through many institutions like Fidelity. I do a lot for my clients too as well. But typically an employer, especially if they might have a match inside of there too as well, you'll want to contribute to that. And that currently that's just under $4,000 each. You can contribute to those. And again, those are tax deductible accounts. That's going to reduce your taxes right now. That's your employer plan and your HSA. That saves you right now on taxes. Yes, they're taxable in the future, but again, it is important to mitigate and kind of manage your taxes all along the way. Because guess what? You got to file a return every year. Even if you don't work, you got to file a return every year. So those aren't going away. It's just something we have to manage every year moving forward. Next thing I do is try to max out that Roth IRA as well too. Now, you don't get rewarded now on your taxes for that contribution, but the Roth in exchange grows tax-free and distributes tax-free in retirement. Wonderful account too for tax planning on the back end. Now again, simple three things. So 401k or the equivalent, HSA, which is a health savings account, Roth IRA. Do those three things while you're working. Very, very simple and effective tax planning and wealth building tools. My name is Justin. Comment below if you like this.